Hello everyone. Welcome to another ExpoLab blockchain speaker series. Today is my great pleasure to have Travis, known as Defi Dad, and he is the Chief Operating Officer at Zapper, and he's been looking in the last 3 years trying to demystify this whole blockchain space, especially when it comes to financial application, decentralized financial application. And today is going to take us to that journey and help us to better understand what are the possibilities and what is the promise for this exciting new field. So without further ado, please take it away. Thank you.
Yeah, thank you so much for having me. So what I'll do is we'll kick off here with just a few slides on just my background, because even what was just shared there, I think it's really helpful to understand that I and everyone else in the crypto community, in Ethereum and Bitcoin, DeFi, whatever, we all started in totally unrelated places, So the community, what's really special is that you won't find that if you want to end up working in the crypto space after college, you won't find a community of everyone that worked in Silicon Valley. I did, but a lot of my colleagues have never, ever been to San Francisco. And one of the most interesting things is that while we're living through this pandemic, I would argue that our community was fairly unaffected, mainly because we all were working, most of us were working remotely already. And we all I think there's a philosophy in crypto about adopting a digital first lifestyle. Now, obviously, I'm not opposed to meeting people in person. I have 2 young kids and I'm very social outside of being online on Zoom all the time. But I think it's definitely proven over the last 12 months that a digital first lifestyle is probably more where we're going. And not to take it in a direction of like a Black Mirror episode, but I recently listened to a podcast. If you all check this out, it's called Bankless. And they do a great job of also talking through all these different DeFi concepts. And their guest, whose name is Balaji, whose last name I can never pronounce, but he's the former CTO of Coinbase. He talks about the fact that the last 12 months have been the first time where we've ever moved to the internet being our primary source of interaction, that the internet was truly born this year, which is sort of counterintuitive. You hear that and you think, what are you talking about? We've all been using the internet for decades now, but we've never lived in a world where people were opting to order on Amazon and only going in store to buy their groceries because they had to. Suddenly, everything, including classes, for me, work, everything is online first. And that is my primary. And the secondary or the mirror of what I'm supposed to be doing is when we meet up in person. So anyways, I'm going to kind of talk through some of that as well. So can you all see my screen? It says Introduction to DeFi. All good.
Yes.
Okay, excellent. Great. And cool. So yeah, just a quick background about me, going with what I was saying earlier about not having, I think, the most traditional background to be in crypto, if there is a traditional background, maybe like having a computer science degree. But for me, I studied chemistry. I ended up in a UC San Diego Chem PhD program. And I left that after 2 years, really enjoyed teaching, found out I really loved explaining complex concepts and trying to help people to understand the hardest parts of chemistry that I personally struggled with as I was learning it. I ended up working across a number of software jobs. And then my wife and I had met in San Diego. We moved up to San Francisco and I got a pretty typical Silicon Valley type job. That job, the jobs that I worked were, one of them was like an advisory consulting job with companies like Box and Malwarebytes, Salesforce. So kind of all those big names, but I was working with them to advise their like heads of marketing, heads of sale, heads of product. So anyways, funny enough though, I ended up then, getting tired of talking about like, here's how you make a great software business or how you optimize it. And I started working across more of the startups in San Francisco. And I found my way in 2017. I had a friend at work who told me about Ethereum and basically told me that it was like this thing that brought together public policy and governance and economics and monetary theory and like all sorts of stuff that he was like, I feel like you would really nerd out on this. Not to mention the prices of cryptocurrencies were going, as high as they had ever gone. So it was hard for anyone not to pay attention. And I started going to meetups, met a bunch of folks, found out that it was still a very niche community, but that it reminded me of chemistry. So I guess to bring this full circle, I really felt like cryptocurrencies had parallels to the physical sciences. And the thing that I enjoyed the most was, how do we communicate this to the masses to help more people understand the value of using a cryptocurrency, let's say like Bitcoin, or to use a smart contract platform like Ethereum. And anyways, I ended up working 2 years with this company called Consensus. They build a lot of different software solutions on Ethereum. The most famous of those is MetaMask. They incubated MetaMask, and they still to this day support MetaMask, which is, you might know it by now. It's the number one way to use a browser with an Ethereum wallet. So we call it a Web3 browser. And anyways, now I work at this place called Zapper. Zapper is a tool for visualizing your DeFi portfolio. And so we'll talk through all of like what exactly DeFi is, but if you think about it, kind of like Robinhood on steroids, or any other, like if you've ever used a trading application or heard of one, you can do anything in finance but it is rebuilt in a peer-to-peer form on Ethereum. So you're taking really like legacy finance institutions with lots of professional services, lots of overhead, and you're breaking it down then into money applications that are automated by smart contracts. And so anyways, what you're looking at here on Zapper is I can track, here's an example of a portfolio. So I can track like what tokens are in my wallet. Maybe like, as you guys know, like I wouldn't say they're the equivalent of a stock, but if you think about it like that, it's like a portfolio of stocks. But there's all sorts of complexities or different mechanisms and applications where I can lend my stable coins and earn trading fees on those, or I can lend an asset like the Wi-Fi token in my wallet and earn 0.86% APY on it. So anyways, this is for tracking all of the different DeFi protocols in one place, because all of these protocols that we're going to talk through, they all have or tend to have a front end. But at the end of the day, this is different than what your parents would have, where they look at a mobile app for Bank of America, or they look at E-Trade. Imagine if Bank of America, E-Trade, and all the other finance services could come together on a single platform, and they could end up exchanging value with one another. And as a result of it, you get cool tools like Zapper, where you can track everything in one place. We'll also talk a bit about what is a DEX aggregator, which is DEX aggregator it's a way to find the best trades that are sourced through decentralized exchanges on Ethereum. It's basically like Google Flights or Kayak for finding the best trades or the best rates. So anyways,
quick question. That's very interesting. So in terms of a cross-chain, so does it handle like atomic swap across different chain? Is that
not yet, but it's so right now everything is everything that we're tracking there is on Ethereum, which, as you know, kind of mirrors the fact that I mean, 99.9% of DeFi applications are built on Ethereum. However, we've left the door open with, we're keeping a close eye on like Binance Smart Chain and Cosmos, Polkadot, a few of the other like major blockchains. We do track Bitcoin wallet addresses though as well. So that's one thing you can do, but you would have to, well, I guess soon, this is worth pointing out, very soon, we will be incorporating one of the applications that lets you move your Bitcoin into a tokenized version of Bitcoin. So that'll be really exciting.
So Zapper itself would act as a proxy for that transfer?
Yeah, you could think about it that way. We are like right now we're a dashboard. We've facilitated over 900 million in transactions over the last year. Actually, less than a year. It's just in the year 2020. But we never actually take control of one's assets. So we think of ourselves as like this hub for DeFi. Basically, people are able to use all these different DeFi applications. We are simply like one of the many gateways to get into that, but we actually don't hold any assets under management. So it's kind of like, if you think about, there was some old saying years ago about like Uber is the =1 taxi company in the world and owns no taxis, and Airbnb is the =1 like hotel, sourcer, and they have no hotels. I've always kind of thought of us in that way, that we've sourced 900 million in transactions, but yet we've never taken custody of anyone's funds. We're just integrating and piecing together all of these different applications.
So, for example, like Fidelity, we can buy all kind of funds there that not necessarily their funds. So would that kind of be another analogy of what is happening in Zapper as well too, like a portfolio manager?
Yeah, definitely. That's a way to think about it. Because at the end of the day, that Zapper dashboard, this is something that anyone can come to, and they can connect their Ethereum wallet, and that's it. I'm not doing any work to track this money. I'm simply just connecting my wallet. I'm not signing up. I'm not KYCing. I'm not providing any sort of information about myself, just connecting my wallet. Also, you can even paste in wallet addresses. So if you are tracking, one thing that's popular in the community is there are wallets that become known as, because everything's public, as you guys know, on the blockchain, there are these humongous wallets with, sometimes 100 million or even more than that in the wallet. And so you can look at that and start to see, like, what is someone with 100 million doing with their money? And is this something that I should potentially consider? Let's see here. So, and anyways, just to wrap up on that, just, reminder, you can check out, it's called Yield TV. It's actually, I could just pull it up here. So there is a daily DeFi live stream we host through Zapper. So it's 5 days a week. It's normally at 12 p.m. Eastern. We host all the leading developers and founders and builders and investors, and basically do 30-minute to hour-long interviews all about their insights into building on Ethereum. Most of the applications relate back to DeFi. Yesterday we interviewed the leading application in decentralized finance insurance. And then today we interviewed a UC Berkeley alum that built this, it's called Alpha Finance, and they enable you to automate investing strategies. So anyways, these are some of the things that I want to cover today, but I just want to pause on all of this for a moment. I would love if, feel free to just unmute yourself and chime in on, like, what topics are you most interested to learn about DeFi? Or if you know anything already, if you have questions you'd like to make sure we answer, I'd love to just get some feedback. And then some of this I might toss out as we go along, and then maybe I can add some more detail if it's not covered in the agenda.
Are you guys starting to see any kind of like machine learning start to come into this kind of DeFi industry or no?
So not on the DeFi side. I'm just personally not aware of it, but funny enough, there is a separate company called Alethea.ai. So this allows you to create an avatar, and that avatar acts as, we call it synthetic media. I don't know, you guys might have like learned about this in another class, but anyways, they've been calling it synthetic media. And the idea is that you can ultimately create like a cartoon character. You can create something that looks like a real person, but regardless, you're creating something that can suddenly communicate and act as like a proxy for a human being. And there's all sorts of crazy ideas here with the fact that, like, would you buy an avatar as like a token? Would you access services through that? Would there be creator or personal tokens to go with some of these avatars? But anyways, that's the most I know about anything related to like AI, which I guess kind of circles back to what you were saying. But anyways, so we kind of talked about this already. Just in a nutshell, what is DeFi and why does it matter? I would think about DeFi as it's taking what we all know as fintech and the way that money applications work today, and it's making digital money the primary. It's moving us away from applications that reflect what we use in the physical world, where I've got $100 in a bank and it shows on my mobile, application that I have $100. Really, what they're showing me is that in their database, I have $100 of credit according to what they should have in their reserve. What we're moving to with DeFi is all of this is digital first. Suddenly, if I have 100 digital dollars, or maybe we call it DAI, which is one of the popular stable coins, it's in my wallet. I can see it. If I deposit it into an application, I can see it in the application's reserve, which is part of the reason DeFiPulse.com is one of the most popular websites in DeFi. Everything is, tracked on chain. So we can look at these to see how much money in US dollars is deposited into the smart contracts of an application. It's similar to assets under management, but remember, in this case, it's the idea with DeFi is that you're building a piece of software that should be able to stand on its own without a team there to make any changes. Obviously, there are teams continuing to iterate on that software and make it better. But the idea is that a censorship-resistant DeFi application should outlive anyone on their team, let's say, no longer being with them or not being available. So you guys can see here, MakerDAO has 2.6 billion. Compound has 1.6 billion. A year ago, these numbers were incredibly, they were so small, but they were so big from where we had come from. So in December 2019, we were at 657 million. So we're, whatever that is, I don't know, over 15x to get to 15 billion. And then if you go back even further, this goes back to when we joined the crypto space, Mohammed and I. So if you go back to August 2017, this is when some of these applications like MakerDAO are launching. And for a while, the number one application in our space was MakerDAO, which is for borrowing and lending. And so we'll cover that here in a moment.
So
yeah.
You said that website examines the contents of smart contracts. Is that what you said?
Correct.
Okay, cool. So it just it just displays like all on-chain smart contracts at this time and just gives you stats on that. Okay, cool. Yeah, that's really cool.
Yeah. It's definitely this stat sometimes can be misleading. There are protocols where this isn't like the best stat to compare them. So keep in mind, it shouldn't be apples to apples, but it has become a really popular way to demonstrate how many people are putting their money or how much money is being trusted in that application. So it's definitely a demonstration, I think, of product market fit. People trust 1.6 billion in Compound to lend their assets and to borrow their assets versus Uniswap. People are providing 1.3 billion in liquidity so that others can trade between those different assets. Let's see here. So one of the things we were sort of talking about earlier, what qualifies as DeFi and what doesn't. And I say what may qualify because I don't think that like any one of us has the one and final answer when we're so early on in this space. But a few things. When I'm using a decentralized finance application, like let's use as an example, let's go to Uniswap. Here we go. So Uniswap is a place where I can trade. And again, it's very simple, me just trading between different assets here. If I put in 1 Ether, I will get 51,841 acro. The ability to trade here only requires a few things. One is that I have an Ethereum wallet, which is my MetaMask wallet. So first off, I have to be able to store my wealth using an Ethereum wallet. This requires, of course, that I am 100% in control of my assets. So that sounds great to the person that lives in a country where they will seize their money from a bank account overnight. For those of us in the United States, you know that there's a lot of friends or family you might have talked to who said, why would I want to be in control of that? Like, that sounds really risky. So this is where we talk about, whether DeFi and crypto, like which types of profiles of users it fits. But anyways, we've got a wallet. We're 100% in control. I don't have to sign up through email. There's no KYC. And at the end of the day, no one takes control of my assets. So if I were to trade this Ether, actually, let me just make sure that I shared my desktop. Hold on a sec.
Wait, what did you mean by KYC?
Oh, good question. Know your customer. That would be like, have any of you signed up for a bank account and you had to show your ID and fill out like your billing address and stuff like that?
Yeah.
Those are commonly referred to as KYC laws. Know your customer. It's meant to prevent money laundering. I mean, that's what we're told, and I do believe it works to a certain extent, but then you'll very quickly find out that some of the largest banks in the world have facilitated all sorts of money laundering, and it happens. And then you say, so why do we have to all submit to this if those with some of the greatest amount of wealth are able to get by it? So anyways, if you check this out, if I'm going to trade some Ether for acro, let's try that one more time. Oh boy, what's going on? The darling of DeFi here is going to fail me. Let me grab another token. Here we go. So I won't go through this and confirm it, but this is all I'm doing is I'm submitting a transaction. I'm paying a little bit of Ether to a smart contract on Ethereum. And as a result, it's allowing me to trade some Ether for that acro token. And when I do that, it's based off of the fact that in Uniswap, there's been 53 million in liquidity provided. People are depositing combinations of, in this case, the Uni token and Ether. And I'm basically I'm adding one ETH and I'm withdrawing however much of the Uni token it is. And so what you end up finding, though, I guess my point, going back to like what defines DeFi here, is it's that simple. It's the fact that no one takes control of my assets. I'm 100% in control. I only interact with software. I don't interact with a human being. A human being doesn't have centralized control to take control of my money or take control of those smart contracts maliciously. So anyways, it's as simple as that. Any questions on how I'm qualifying what is DeFi? And then I could tell you kind of like what is not DeFi. So the reason I pointed out what may not be DeFi here is I'm only calling that out because it's become a very popular marketing term. And I take pride in that marketing term because I think I've helped to make it popular. And our community has made it into a really popular way to quickly explain what you do. Like, oh, I'm building XYZ. What is it? It's a DeFi application. Oh, cool. So it's like a money application and it's peer-to-peer and it's probably built on Ethereum. Got it. The problem is that you'll find that it's a term that many want to, they want to broaden the definition of it because it's great for marketing. So if, for example, Coinbase isn't guilty of this, but I'll just use them as an example. If Coinbase said, hey, if you're willing to lend your Ether to us at Coinbase, we will pay you interest on it. This is DeFi lending. Come lend Ether with us at Coinbase. Well, what's wrong there? First off, to use Coinbase, you have to KYC, you got to sign up, give them your email, all of the usuals there. They're going to take custody of my Ether. I have to trust them to do that. Even though I'm obviously using Coinbase software, it's the fact that it's, upfront, it's centralized. If I submit Ether into their software, it's possible that I won't get it back. So all of these constructs don't mean that I shouldn't use Coinbase. It just means that to me, it's not DeFi. And it's important that we understand the differences because for those who don't live in a country, which is a lot of people in this world who don't live in a country where they can 100% depend upon the laws to, let's say, protect them from a bad actor, or even be able to depend on a government not to be a bad actor and to seize their assets unlawfully. That's scary. And so that's what, like, to me, like DeFi right now, it's kind of like the computer clubs in the early 90s or late 80s. It served a very niche community, but 15 billion is going to look like nothing when we get to 1 trillion. And 1 trillion means that many more people have exposure. And it means that maybe, a grandmother that lives somewhere in Southeast Asia is able to invest, $10 into the S&P 500 because she buys an S&P 500 derivative token that's built on Ethereum. And why can she do it? Because all she's using is an Ethereum wallet, and she's connecting to the internet and using an application that's permissionless. So I'll pause there. Do you have any questions about anything I've covered so far?
So it's very interesting. So if I may kind of go back and sort of go through this once more step by step.
Please.
So one way of sort of thinking about DeFi here is that I don't need registration. Mm-hmm. So that's number one thing. So kind of our checklist to see whether this is qualified for DeFi or not, a checklist. So a Coinbase requires some form of a registration, and it does have a central flavor to it, so that doesn't qualify as a DeFi. It's good, but it's not DeFi.
Yes, always make sure, if anything, we don't want to paint it as good and bad, because if you are not wanting to be 100% in control of your assets, DeFi might not make sense for you today. And starting with a crypto account with Coinbase might be a great way to start to get exposure and get acclimated to how to handle cryptocurrencies.
So not the need of having the registration, and also the underlying storage model for both keeping track of the transaction and also holding the asset itself is decentralized as well, like kind of built on Ethereum or any
Kind of,
permission.
it's actually like this, not your keys. Now, Andreas Antonopoulos, super famous educator in cryptocurrencies. He's been really notable for what he's taught us all about Bitcoin and Ethereum. Just listen to this like first 30 seconds. Oh, hold up.
If you don't control the keys, simple rule. If you control the keys, it's your Bitcoin. If you don't control the keys, it's not your Bitcoin. Your keys, your Bitcoin. Not your keys, not your Bitcoin. Your keys, your Bitcoin. Not your keys, not your Bitcoin. Your keys, your Bitcoin.
Anyways, he goes on to continue to repeat this, and it's not your keys, not your Bitcoin. Same thing with any token. Not your keys, not your token. With DeFi, not your keys, not your token in a DeFi smart contract, not your assets. I mean, it takes that ethos and it builds upon that. But you'll find, as we talk about this more, it's definitely less crystal clear, because you start to say, well, how do I know that no one has control of those smart contracts? And what does that mean if they do have control? Maybe there's a 48-hour delay before a change can be made. And that's what protects us as a community, so that a number of developers can continue to improve the code. So anyways, not your keys, not your Bitcoin. It's really easy to remember, and it helps to sort of define. It even helps us still to this day to separate what is DeFi and CeFi.
Yeah, so I mean, definitely that I think is another interesting characterization. And so again, not having the registrations, and it's your own private key, and you are transacting with your public key. And sure, so that satisfies part of the equation, but also the maintenance of this ledger. It's that I suspect is decentralized, so that needs to be decentralized as well too.
Yeah.
And now the question of the asset itself, does it have to be an asset that was created through proof of type of work, mining, or it could be any asset? It doesn't have to be necessarily limited to proof of work type of asset.
Yeah, good point. In this case, so I don't have to worry about differentiating, only because most of these tokens are currently on Ethereum. I would say the second most active blockchain that's attempting to build, I think, real decentralized finance applications is Polkadot. Binance Smart Chain has some activity as well, I guess. That's fair to say they do, and Cosmos. But yeah, everything sort of centers on Ethereum. So it's an ERC20 token. And yeah, luckily we don't have to worry about that. But the best answer is actually it depends, because there are certain tokens. There's some newer tokens that use this mechanism called a rebase. It's an algorithmic stable coin where they actually are modifying the supply of the token. And it's something we won't cover today, but just think about what I just said. They modify the supply of the token. Imagine like you look at your wallet, and one day it could have 100 tokens, and the next day, because the price has gone up, quote unquote, too high, or it's above this peg, they increase the supply to bring the price down. So I think what I mean to say is this is another example too of like there's all sorts of experimentation going on. It also doesn't mean that it's safe to use, or that one should invest all of their life savings into it.
And so maybe I'll pause, see if any of the students have any questions. I have one more follow-up.
Absolutely, yeah. Yeah, any questions, guys?
So could you go back over, you were talking about Coinbase not being like true DeFi. That's just because you need to identify yourself, right? Yeah, that's like one of the main prerequisites of DeFi.
Yeah, let me, you know what,
How,
what I haven't done so far is let me give you one other quick example. Here is one of the most popular DeFi applications, Compound. And this is how simple it is. On one side, you can supply or lend assets. So there are 10 of them here. On the other side, you can borrow those assets. Now, for me to borrow, let's say, if I wanted to come here and take out a loan, let's pretend that I'm holding Ether. Ether is the equivalent for us of Bitcoin on the Ethereum blockchain. We see it as a store of value. It serves all sorts of other utility, but we generally believe it to be a store of value. I deposit this thing that I find to be valuable, and then I can borrow a fraction of its value in one of these other tokens. And if I borrow, let's say I'm lending Ether and I borrow DAI, I'm paying 4.07% annually, but I don't have a set term. I can basically borrow, let's say, 100 DAI. I can pay it back whenever I want, as long as I maintain that I have a certain amount of collateral in here to cover it. And if I don't, the software will liquidate it, pay back my loan, and basically it's my problem. I might walk away with the DAI, but I've clearly lost something there, and the software ensures that lenders don't lose out. So supply, borrow, no set terms. These rates change according to how much DAI is borrowed. If people keep borrowing DAI, the rate goes up. If people borrow less DAI, the rate goes down. And so we've taken one of the most important mechanisms in a bank, and we've automated that to the tune of 1.6 billion in assets under protocol. Does that help, Jake?
Yeah. So what happens if, say you have a certain amount of a certain asset, and then the value of that asset just goes straight down when you take out a loan? Yeah.
That's just it. And so all these nuances come into play. Like Ether is a volatile asset. It goes up and down in value. It's up a lot this year, but it's gone down a lot in previous years. What if let's say a different example would be, well, I've got wrapped Bitcoin here. So this is Bitcoin that is, it is a token that represents Bitcoin on the Ethereum blockchain. So it holds to the price, it's pegged to the price of Bitcoin. So that's another volatile store of value I could use. What happens though if I have DAI? And so this is a stable coin. So it's generally around $1. Now, there have been times where so many people need this dollar because it's so popular and it's used in different applications and people earn interest on it. The peg went from $1 to $1.10. Suddenly, if I have $1,000 of DAI, I now have 1,100. Suddenly, this has a premium to it. I could deposit it and I could borrow against it. I could borrow USDC, which is actually at the dollar peg. So I only mean to call this out because it sounds like a much smaller difference than us borrowing against something like Ether or wrapped Bitcoin. But this is where DeFi is starting to intersect with traditional finance, and namely Forex markets, foreign exchange markets, where you have all these currencies trading against one another. Sometimes they could move less than 1%, in 6 months. But when you're trading incredibly large positions, there's a lot that one can do as a trader, and that's what we see in Ethereum, in DeFi here is, people are moving hundreds of millions of dollars in transactions. There's people like me that'll move $100, but there's traders out there that are playing with incredibly large amounts of money. And you can see in real time, you'll see these rates go up and down based on those movements. Jake, any other questions on that? Or anyone else want to chime in here? Does this make sense? This is one of the common use cases I wanted to cover.
I think, yeah, I think it's very, it definitely makes sense. So kind of follow up on the question that I was sort of building upon earlier was, so now one use case is that if I don't trust my government, I don't want to show my registration. And also perhaps I don't even trust them that they're going to keep track of the ledger accurately, or if they're not going to later on try to go back and change the history. So that's, again, a motivation for having a DeFi way of doing financial transaction. So now, but kind of going back to the other example, if the government itself, I cannot be trusted. So that means the government, I cannot trust the government if I put my money in the safe in a bank. Well, on the same ground, wouldn't you also say that, well, if I'm keeping my key, my private key, it's in the safe at home. I mean, the government can knock the door anytime, and it's doesn't seem to be able to do anything in that situation. So would it be robust when the government itself is not conforming?
Yeah. No, you're thinking about all the same questions that I think about, but again, I guess it's like I feel fortunate that like I don't have anyone banging down my door. I can say that. So I have a number of friends that I've met who live in Argentina, or have lived there, and so in Argentina. This is how screwed up it is. There are such tight capital controls that they can only spend so much of their money. And the inflation rate at one point this year was like 60%. So you have money that you're being paid in locally, and that money becomes less valuable every day, to a point where you can see simple things in your life, like buying a bottle of milk, knowing that that bottle of milk cost a lot less money the week before. So these are folks who have been very dependent upon DAI, which is, it's a decentralized stable coin. What I'm showing you here is if I were to open up a loan with MakerDAO, if I put in 10 Ether, which is equivalent to, what is that? 10 times 6, it's like $6,000. Oh, there it is, $5,518 based on the price of Ether. I can borrow against that collateral. I can borrow 66 cents on the dollar. So let's pretend that I was going to borrow 1,000 DAI. This is how this collateralized decentralized stablecoin is created. So suddenly you have DAI being created because people they find value in MakerDAO to the tune of, was it 2.6 billion? And this is really what kicked off the DeFi movement, is that suddenly anyone could use their Ethereum wallet with a permissionless application to deposit a store of value, Ether, and mint DAI. And why would you do that? Why would you borrow a smaller amount of money against a larger amount of money? Because you think that this Ether or Bitcoin or something like it, you believe that it's more valuable, that it's digital gold, and that it'll go up over time. For now, though, you can take a loan against that, and you can keep it open. You can keep that money for as long as you want. People will take out this DAI and they could pay a bill, but in many cases, they use that capital to earn more. They'll lend the DAI because they can earn 5% on something like Compound, or right now it's earning 3.7%. So here, I borrow my DAI from my Ether, maintain my position in my digital gold of Ether, and now I'm lending it and I'm earning 3% on my DAI. Anyways, help to keep going off on more tangents about the DeFi stuff. But I think your point about thinking about what it will take for those that live in a place that live under an authoritarian regime to use these tools. I think that to me is that has to be the long-term goal of DeFi. A lot of very wealthy people own Bitcoin, but I think the most remarkable stories are of people who own Bitcoin in countries where their fiat currency has become worthless, and they need a digital store of value that they can put in their pocket that no one can find, or that they can write down or tattoo a seed phrase to recover their money, when they can get out of the country.
Sure. I mean, that definitely, I think there's application there potentially. But the other thing, now even coming back to the United States, for example, I can hide my identity in terms of registration and don't disclose the transaction that I'm making. But at the end of the day, at some point, physical things will be attached. Things need to be moved around. An address. So then how do we conceal that part? Because that one is completely exposed. I may have didn't disclose on the face of it that I bought a book for $5, but when the book arrived, then somebody can track that, and they could potentially figure out that book, they may be able to start make sense of what's happening in the ledger itself, even phenomenal. So how do we deal with the external factor? Is that at the end of the day, we're not just going to flip some bits from one symbol to another symbol, physical goods, and physical thing needs to be exchanged as well.
So one of the challenges right now is we need decentralized fiat on-ramps and off-ramps, because going back to this concept that I didn't come up with, but I'm in love with, is this primary versus your mirror. This idea that right now, a lot of people will put money into a cryptocurrency, or in this case, they'll participate in DeFi, but they still view it as like, how much do I have here in US dollars? And at the end of the day, they're going to eventually cash that out, and they're going to use that money for things in the physical world. They're going to pay their rent in US dollars. The question becomes, when does everyone start accepting stable coins? The US government spent hundreds of millions of dollars on those paychecks in March, April, May, throughout the summer. And I know many people in our community were looking at each other like, this is so insane. What costs could have been saved and how quickly people could have received money if it were in a stable coin. The problem is what does grandma do with her stable coin? Like, even if you teach her to download a mobile app and have that, what happens when she goes to her favorite restaurant and they don't accept stable coins? So there is still this issue, of the fact that what we're doing in DeFi is still a reflection of a primary system, the primary finance system in the physical world. What I can attest to, though, is I do believe that, it could be at the end of my lifetime, but I believe that a digital first framework will become the norm. 2 years ago, I thought of it as, what is in the exchange that I own, like a centralized exchange like Coinbase, and then what cash do I have, at home? What do I have on like credit cards? So most of my wealth I thought about in that primary system. 2 years later, I'm about 85% bankless is the way we say it. So 85% of my wealth is all digital. And I like it that way. I like it that way now, because I do enjoy the control. I do enjoy the think of it this way. I don't ever worry about whether my bank's open. I don't ever think about who I need to ask to move my money. I don't think about the fact that I have multiple tokens that, let's equate them to stocks for a moment. No one will let me put up the value of my stocks and borrow against the value of it in another token. In other words, like take the aggregate value of it. But I can do those sorts of money games very quickly with decentralized finance applications. And so this is where like your money becomes more like email. Right now, our money is very similar. Our money and finance applications, even Robinhood, as magical as Robinhood seems, at the end of the day, like you've got to wait days for your money to hit the account and for it to come back to a bank account. And at the end of the day, Robinhood's in control. If they choose to shut down your account or they think that you've done something nefarious, and even if they're wrong, they're in control. It's very different here when you're using DeFi applications on Ethereum.
So that was the last analogy you said. It sounds very fascinating. So basically, thinking of as DeFi as to dissolving all the boundaries and as simple as sending an email. I don't need an authorization to send an email to any student, for example. I can send an email to Jake or Sajjad or Suyash or Tamir or whoever's on the call right now, and I don't need to get an authorization. I just send that email. And with the bank, there are loops and hoops I have to go through in order to, for example, if they're from a different bank, or it's not as fluid.
Yeah, I was trying to look this up. I can't find it here now, but there was a bill that was just proposed in Congress, and it was proposed by a real idiot who teaches at Stanford, which we know all the smart people go to UC Davis. So screw Stanford. Anyways, this professor that wrote up this bill, I mean, he doesn't seem to fully understand that, like, how stable coins work, how a validator works on Ethereum, or how nodes work with like a Bitcoin. And all of us were bantering about this because this person doesn't seem to understand how a blockchain works. And we were trying to explain that, what you're working with now is like what money is doing, evolving with Bitcoin, Ethereum, and financial applications built on Ethereum. This is like the birth of the internet, but it's for money. Right now, money is in a very antiquated system. We commonly compare it to it's like the US Postal Service, and we're moving towards email. When you send an email, you don't answer the same questions that you answer at the post office. You don't have the post office advising how email servers should work or how those services should be offered to end users. But for some reason, we're living in an interesting time where we have the U.S. Congress, especially, and legacy banking industries looking at cryptocurrencies and DeFi now, because Ethereum is on pace to settle 1 trillion in transactions on Ethereum, which has a lot to do with DeFi. There's 18 billion in stable coins. They're looking at it and they're saying, what framework can we apply from the world we're in to what this stuff is? Well, again, if you could go back in time, would you have seen the postmaster of the US Postal Service advising how email should be handled? So it's this whole new construct where everything's digital first. And I think it's a little bit scary for some people. I think it's just going to take time to realize that that it's okay, that the way our money system works today is very antiquated, but it's time for an upgrade, and that a lot of people will be served better when they can move their money when they want, wherever they want, including someone who wants to buy 1/1 millionth of a Berkshire Hathaway stock. They should be able to do that You could do that if you were buying a derivative of Berkshire Hathaway's stock on Ethereum. You can't do that when you're using these old systems that, whether it's intentional or unintentional, cater to those who already have money. And so that's one of the things we think a lot about, is how do we sort of break your money, break out your money, or break free your money, so that you can do what you want when you want with your money, and hopefully be able to grow your wealth. At the end of the day, that's my hope, is that if people have access to lower borrowing interest rates, if people have access to higher earning interest rates, well, like suddenly that can allow someone to start to really build wealth. That was a really long-winded answer to your question. By the way, just conscious of time here, I want to make sure I'm okay to keep going if we end up running over, but I don't want to keep the class over. So just, should we wrap in about 12 minutes, or did you want to go longer than 12 minutes?
We typically tend to go longer as well. So it is completely, either
No
way.
surprise.
So,
we have a community of talkers in crypto. Unfortunately, I'm the lead talker. So guys, any other questions at this point before we hop into some other applications?
You said earlier it was something like it was 85% you were bankless for your wealth. I was just curious, is that like mostly in stable coins, or is it in like, because I would be worried about volatility. So how does that work?
Yeah, good point. A few years ago, stable coins weren't, there was only a few. DAI was still really new and to be distrusted because it was so new. And then USDC became available, which has some centralized risk to it, but has become, I think there's like 3 billion in USDC. So, the short answer to it is now we can be in volatile assets, or we can be in stable coins. 3 years ago, I had no exposure to stable coins. I had no idea that you would be able to eventually lend them the way you do with like your US dollars. When you put them into a savings account, technically you've lent it to the bank and they lend it out to other people, and they can lend up to 90% of your money. But in DeFi, because the bank is automated software and there's no lights to keep on and there's no salaries to pay, suddenly I, as a lender, can earn more on my stable coins, and the people borrowing them can pay a lower rate in many cases, not always, but in most cases. And that ends up being like one of the most, like, I think, magical examples of how DeFi, it outperforms what legacy finance is doing for us. I was in the summertime at one point, I was earning like 30% APY on my stable coins. And that's amazing, like to be able to do that. Also to be able to withdraw it when I want. If you've ever seen one of those mailers with like Chase on it that says, if you deposit an amount of money that no college student would ever have available, then if you keep the money with us for 90 days, you'll earn X. If you do the math, they in many cases pay about 5%. Oh, shit. They pay about 5%. And it's 5% for a large sum of money kept locked up for a certain number of days. DeFi is very different. I can lend $1. I can lend $1 million. We both earn the same rate. And we both can, there have been times, guys, where I've deposited money and I've withdrawn it 24 hours later. Something changed. I learned that maybe I didn't trust the application suddenly, or I needed to move the money elsewhere. But I'm able to do that instantly within whatever, confirmation time is required by MetaMask. Let's see here.
So that's an interesting question. So again, you kind of, I think, create a new interesting next question to ask. So
please, yeah.
That being fluid, would that also create the volatility that also could be problematic too?
You're saying, do you think that volatility can affect that fluidity?
No, the fact that you can just very quickly move things around.
Oh, absolutely. Oh, yes, absolutely. Yes, it is. It means that if we go back to, let's see here, go back to Compound. Can you all see Compound again? You can see Compound up here in the left hand. If I were to borrow, or if I were to lend, actually, shoot, this is a terrible page to look at. Let's look instead at the markets page. Here we go. Oh, there we go. Okay, so right now there is 1.57 million DAI that's being supplied, and about almost 1.3 million being borrowed. These rates were very affected over the summer because what happened was Compound launched. Compound is, remember, it's the protocol that powers all of this. They wanted to decentralize control of that away from the centralized team. So they do that by issuing a governance token. Well, who better to have a say in future upgrades and proposals to Compound than the users? So they said, we are going to reward you based on how much you lend and how much you borrow daily. And so everyone lending and borrowing started to earn a fraction of the supply of these governance tokens being issued. And then you use the tokens to vote. So what happened at one point was the way that this mechanism worked, it was incentivizing people to open up leveraged positions with Tether. And suddenly the Tether markets, let me see if I can show you guys. There's a better chart here. Here we go. This shows you actually how much, this is how many comp governance tokens are being issued per day. There was about like 2,600, basically all of the tokens were being issued to Tether. Well, once others accumulated more of that comp governance token, then they went and voted on an upgrade to say that this mechanism doesn't make sense. We need to change the model so that it reflects a more, what do I want to say, a fairer way to distribute based on some borrowing curve, which really helped DAI, which has been one of the most valuable assets that's sought after on Compound. So I guess I mean to just point out the fact that I mean, these governance tokens over the summertime really caused a lot of volatility because people were moving large amounts of money. You can imagine here, if you knew that you could be earning, in some cases, I had created a tutorial at the time, and I know a number of VCs followed up on this, or they were already using the strategy. I mean, some of them were making, hundreds of thousands of dollars in a week. And that wasn't with, I mean, to me, it's a lot of money, but like they were opening up leverage positions with DAI. And as a result, the rates were going up for borrowing. And anyways, what ends up happening is that at the end of the summer, we started to see a drawdown. Prices had been going up and markets are cyclical. So eventually like people stop buying and, you see a sell-off. And when you see that sell-off, because there was so much leverage tied up, not just with Compound, but with lots of different protocols, you start to see really rapid drawdowns in the price. And so, one of the wonderful things about DeFi is that you can move your money whenever you want, for whatever reason. The bad thing is you can move your money whenever you want for whatever reason, and it'll affect the price, and it'll affect some of these rates and even cause some systemic issues if things really go bonkers.
So the other interesting point you mentioned is that, like the analogy of the email, I can just send an email to whomever I want, anytime I want, and I don't have to worry about the structure of banks and so forth. And the other point that you said that really empowers this new DeFi space is essentially micropayments, that I can either loan or purchase very small asset at very fine granularity, and perhaps there's no limits on how mini scale those purchase and selling could be. But what about the transaction fee? And it seems the transaction fee, they tend to go higher. So would the transaction fee kind of in the long term prevent essentially these micro movements of funds around?
Yeah. So if anyone's not familiar with this, what we're referring to is the gas price. So if I were to, let's see here, if I were to go back to Compound, let's pretend that I'm going to lend, I'm going to lend some DAI. So what I would do here, this is one of two transactions I would have to put through. Oh shoot, actually, let me just see here. I don't think let me make sure I'm sharing my whole desktop so you can see that. Here we go. Okay, so again, I have some DAI, so I'm going to lend my digital dollars because I want to earn 3% on them. So I go to approve a transaction. What was happening in the summertime is these fees, which look really small here at 68 cents, these fees were up here at like 500 gwei. And this refers to, this is the way that you compete to have your transaction confirmed. It's like an auction. And so I'm bidding, and if I bid too low, then my transaction will sit there and I'll have to wait till others' bids go lower as well. Well, what ended up happening was in the summertime, these prices, so right now this is saying that if you want to get through a transaction in 15 seconds, put the gas price at 47 gwei. And this thing is fluctuating. You can see the little orange line. It changes like every few seconds. During the summertime, this hit about 1,000 gwei. And it's because people were moving such large amounts of money, which you can kind of get a sense of just if you go back to DeFi Pulse, just because it's really easy to understand. Look at around here is where the mania starts to kick in. In June, we go from 1 billion. This goes from what, July? This is July 1st, we're around 2 billion, and we are up to 10 billion by the end of August. So within a 2-month time span. And this just means that everyone's competing to move their money around. And what happens is when those gas prices go up, suddenly that transaction that was going to cost me 68 cents is going to cost me $15. And that is nothing compared to the computation that's required for other transactions where you could be paying $100 or $200 or even $500. That was a really confusing and frustrating time. And it's a reminder why Ethereum is moving to what's called proof of stake. It's just launched phase 0 of the move to proof of stake from proof of work. Basically, Ethereum is, I wouldn't say it's broken, but the demand for block space has become so much, and DeFi has a lot to do with that. It's not all of it, but it has a lot to do with it, that we're all like really eager to get to proof of stake so that we can have higher throughput and we can get away from these goofy gas prices being so high. So yeah, anyways, just pointing out, you're 100% right that gas prices has been a hindrance to mass adoption. It's now we're in the early days. We're in such the early days still that sure, like, is it preventing Ethereum from growing? Clearly not. If you look at this, even if you look at, check this out. This is Ether, which I think is a better way to measure this. And you guys can see that over the past year, we see it moving upwards And then what happens here is this is people depositing into proof of stake. So they're becoming validators to help bootstrap Ethereum's new architecture called Ethereum 2.0. But anyways, we've grown a lot, and like we've got to get to a point where transactions are instant, like basically the way you interact with like a Robinhood app. That's where we're going to get to. It should be a few milliseconds or a few hundred milliseconds for transactions to confirm. Guys, any other questions on the gas?
Wait, can you explain how, because people are locking into the Ethereum 2.0, that the Ethereum like locked in DeFi is going down?
Yeah. These are so just this accounts for this chart accounts, this list accounts for all the major decentralized finance applications. It doesn't account for, let me show you a different chart here. Here we go. So so yeah, what you're calling out there though is the fact that we had, gosh, I can't remember the exact number, but oh, wait a sec. I should be able to figure this out. Hold on a sec. Twitter, ETH2, deposit contract. Maybe it'll show us now. There, okay. So there are 27,357 validators. That's times 32 Ether. So there's 875,424 ETH, which if we multiply that by a price of, let's say, 550 US dollars, what is that? 481 million, and it was over 500 million. So yeah, about $500 million of Ether has moved on. I guess I can't say all of it here. Obviously, there's other Ether here. Maybe people just sold their Ether or they moved it into another asset. But yeah, there's been this major move, which was actually this is such an important thing that Ethereum moves on to proof of stake. So it's just kind of funny how obvious the trend is there. It's like, this is everybody moving out of DeFi applications and into proof of stake or Ethereum 2.0 beacon chain. So.
Okay, that makes sense.
So actually, I've got a quick video here we could watch that I think of all the videos, we don't need to watch the other ones here. I think we kind of covered all of these already. There's one here, I think for everything that we've covered today, like this idea of what is the difference between DeFi and CeFi. So I worked on a series of videos that are being released through the Defiant. You should go to the defiant.substack.com. Cami Russo is a former Bloomberg journalist. She's been one of the leading DeFi journalists. She's very good at explaining DeFi, and she sources all sorts of great stories that keep us up to date on it. But anyways, if you're all down for this, is only 2 minutes and 50 seconds. I think you'll get a lot out of it if we watch this. Does that sound good? Let me know if you can end up here.
Now, there are three major differences to know between CeFi, or centralized finance, and DeFi, or decentralized finance. First, in crypto banking services, centralized finance, like Coinbase, Binance, Huobi, the big boys you've all traded your crypto on, these are owned by a single entity or often a corporation. CeFi teams often provide valuable services, but at the end of the day, they're 100% in charge. They can let you in and they can kick you out. But in DeFi, applications aim to decentralize that ownership and become community-owned, kind of like a grocery co-op. Everyone owns a piece of it, and its code is run and maintained by the community. Now, secondly, in centralized finance, you often have to go through a sign-up and submit to KYC, or Know Your Customer, regulations. And this is often to abide by regulations and prevent criminal behavior like money laundering. But at the end of the day, this is cumbersome and gets in the way. It provides friction. In DeFi, as long as you have a crypto wallet like MetaMask, you don't have to submit to KYC or sign up to anything or ask anyone for permission. Just click connect and you're in. And that's what we mean by DeFi being permissionless. No permission required. In centralized finance, we trust exchanges and other centralized apps with our assets. In fact, we don't really have a choice. If I deposit into Coinbase, I am trusting them to keep the balance of my crypto assets safe while I trade. But in DeFi, I never have to trust anyone. I just custody my own assets. And even if I trade them, it's a peer-to-peer swap where no one else ever takes control of my assets. So I depend on the smart contracts to execute transactions and trades, not people. So the takeaway here is that CeFi and DeFi provide similar services, but centralized finance, CeFi, is better for those of us who prefer to play by highly regulated rules and fill out the paperwork to get in the club that custodies our crypto assets for us, and in doing so gives us permission to participate in their crypto services, but of course also has a helpline, versus in DeFi where we're 100% in control of our assets, trusting the code, which requires no permission, but there's nobody for us to call when something goes wrong. So yes, there's good and bad to consider on both sides, but we'll dig into that more in future DeFi 101 episodes. But for now, at least you know. So you've been watching DeFi 1.
There we go. Anyways, any questions about that? I feel like we covered a lot of it actually already today, just talking more generally, but Robin, who's the producer here, is just, he's so, that isn't my work there in the end. I think Robin is the one that, he's such a great storyteller. And if you want to end up watching more of these videos, just go to the Defiant and subscribe here on YouTube. It's the playlist is DeFi 101, and it's actually designed, it's really designed for folks who have zero background, like all of you do, at least wanting to explore blockchain. It's meant to help them understand from like A to Z how DeFi works.
Oh, that was very interesting. Nicely and simple explanation. One more question. So as you kind of mentioning, as this sort of the growth of this economy of Ethereum, as it kind of expands, one would naturally think now there's going to be more transaction. Is it possible now at some point Ethereum itself becomes centralized and collapse on its own weight just because of its widespread adoption?
I think, I mean, like I only pause because I like always wonder if I'm the one in the bubble who doesn't like recognize how challenging this is ahead. I think like taking notes from Bitcoin, which has been around twice as long, and really we all can acknowledge at this point, Ethereum and Bitcoin have, you know, they're the outliers. We've have a censorship, store of value, and transfer of value in Bitcoin. And then in Ethereum, we have that same store of value, transfer of value, but really what makes Ethereum special are these, you know, the applications that are being built on it. And I see them both as flywheels, and they're flywheels with, they have, I think like they are examples of software empowering people. And it's very difficult to put the genie back in the bottle. It's very difficult to unsee that value. You know, like I don't seek out gold because of my interest in Bitcoin and Ethereum. I want to be in control of that and know that I don't have to trust anyone to hold my digital gold. I don't buy traditional art. I got some exposure to art by going to Super Rare and buying digital art where I'm 100% in control of it on Ethereum. Like this is art that I own, but I'm in control of it. And so I don't see this going backwards. I think like us moving towards all of this being digital first and DeFi representing that, like, I guess I don't see a path forward for someone to take control at this point. Like it would be very would be basically next to impossible to take centralized control of Bitcoin. You'd have to accumulate so much Bitcoin or so much hash power. And with Ethereum, you similarly, because we're moving to proof of stake, without going into it, because I frankly shouldn't be trying to describe proof of stake, but with proof of stake, you just have to outright own so much Ether. And if you think about it this way, if you own that much Ether, to own that much and to destroy the value of it by somehow grasping some greater centralized control, it would hurt the value of Ether. So you'd be working against the value of all of the money that you actually own. So yeah, I mean, they're both, it feels like remarkable times we're living through with the two of them. And I think I'm open to the fact that I just have no idea like how exactly the future plays out. But I know very simply that the value that we've been empowered with because of decentralized finance, because of digital gold through Bitcoin and so on, I know that it's impossible to unsee this. I always think of it like there's no way I'm closing my computer one day and saying, you know what? I would rather just use Robinhood at this point. I would rather go back to putting my money in the bank and not being able to access it when I want. I would love to earn 0.01% on my, savings in my credit union. Like, I don't want to go that way because I know that the fiat currencies that I use, or in this case, the US dollar, I know that US dollar is depreciating in value. And so for me, it's a race to beat that and to build more wealth. And I think one of the best ways to do it is with decentralized finance. So.
Well, again, so just kind of maybe a bit of a clarification. I'm not trying to say that kind of backtrack. I want to kind of hit interesting problems that kind of arise. If I want to look at a research problem, a student wants to start a new problem, what are the most challenging things that it lies ahead? What are the interesting problems we should focus on in the next 3 to 5 years at a technical point when it comes to the wide adoption of these platforms? And with regard to centralization, I guess I overload the use of the word centralization, not in terms of the trust model, but in terms of this Ethereum network becoming so big, and now with so many transactions is happening, it simply cannot handle the load and collapse, becoming central in that point, not as a centralized trust point.
Yeah, great question. I probably shouldn't answer that question, but who I would tell you to look to answer it, having looked at your the agenda of speakers you all have hosted, Preston Van Loon from Prismatic Labs would be one of those people who could point us in the right direction as to like what research needs to be done to further scale Ethereum post this Ethereum 2.0 implementation, which is going to take at least I think another 2 years. Also, you probably all know him by now, but Vitalik Buterin, the founder of Ethereum, he's very good at communicating these really complex problems in simple terms. So I don't really know, but I know that from a user standpoint, the one thing that sticks out to me is, I think one of the hardest things is how do you solve for fiat on-ramps that are not controlled by a centralized entity? So those, we talk about all of this, but if people have to move money in and out, I mean, that breaks the model. They have to move money out and they have to maintain a relationship with a centralized exchange. And then one other thing that might go with that research problem or research problems to look into is I still think we have a long way to go in terms of storing value, being 100% in control, self-custody with, wallets like MetaMask, or there are mobile wallets like Argent that are really popular. How do you do it so that it is impossible? How do you do it so that you enable someone to securely store their wealth, and only they can access it, but no one else can. It's just such a difficult problem to solve, and I would definitely look to Argent as one of the leaders there. They're trying to help solve it, but they've got problems with their own model as well right now. So does that help at all? Yeah, hopefully.
Oh, it's a difficult open-ended question. So
yeah,
I think it's a great insight. As the rest of the talk, I think, has been very, very insightful.
Yeah, awesome. Well, I hope you guys are enjoying my art here. You got to go into this is totally going off rails, but there is, when we talk about that digital first world, so there are VR worlds that are using Ethereum NFTs, non-fungible tokens, which is it allows me to own something that is unique, like a piece of art or maybe something that I play in a video game. But anyways, if you guys go to cryptovoxels.com, I just think this is like one of the coolest places. It's loaded with digital art. So this is why I think of digital art first, because if this is where I love to go, now granted, I still live in a home and I have kids and I have interactions in real life, but if you create art in here and everyone buys it in here, and you have meetups in here, and you own a piece of land in this digital world, suddenly we're shifting from the meat space that we all live in to something that's digital first. And anyways, I just love this. If you click on any one of these two, you can make offers on their art if you have a MetaMask wallet, or you can just see how much the art is worth, things like that. So.
And do I get something when I pay it? Do I get something tangible in my hand, or I always have to look at it on the screen?
So it's just like a token. If someone said to you, hey, well, what can you do with that Bitcoin? You're like, well, I know that it's mine, and I just need software to of course verify that, but I can spend it, I can trade it. Same thing here. You can, for me, I can go to Super Rare, and I am the only one who is the owner of these. If you look these pieces up, it says, DeFi Dad is the owner. It's attached to my Ethereum wallet address. So it's probably the nearest extension to what we've talked about with tokens, but it's a lot more visual, and it's fun. I think this stuff is just fun to look at. And it's scary how much this goes for.
They're very interesting, but I'm working in this space, and I'm still, I think, my mind, I still don't have the mindset to sort of understand it yet. I still don't understand. Yeah, I don't understand it, and I'm going to maybe say that in a controversial way. I'm not sure if, in order for me to understand it, am I attaching to reality? Am I becoming detached from reality? So,
for what it's worth, I thought this stuff was stupid for many years. I said it was.
Well, no, not necessarily. I'm not saying. I'm not.
But yeah, I thought this stuff was really dumb for many years. And you can see, guys, the prices of these. This isn't a good example, but there's some that have sold for hundreds of thousands of dollars. I actually would also encourage, if any of you are interested to learn more about this VR, this bringing together of VR and DeFi and crypto, look up the WHIP meetup. So these people host VR meetups. Here's an example of it in that Crypto Voxels world. And, as I was showing you, I don't even need a MetaMask. You can just open up Crypto Voxels on your computer. Now, if you want to own wearables that define your avatar, if you want to name your avatar, if you want to, these are homes that people have built in the background. And I know it all sort of looks goofy, but it's pretty cool. I think it's if you ever put on an Oculus headset and then you look at this as well and you say, how is it not possible that all of this is going to come together and we're going to live in a world where, you know, maybe some of us still work in an office, but I think a lot of people will live in a virtual setting. You know, they'll live in a home, but why would you live in a tiny apartment when maybe you spend more of your day with a headset on, owning digital things because they're assured to you, owning them on a blockchain like Ethereum? You know, why wouldn't we go that route? It seems like it's a quicker route to a fairer world, if everyone can get access to the internet.
I mean, it sounds very interesting. I think it just requires adoption of thinking. And I just want to say this too: owning digital thing, it's not tangible. I mean, at some point, I mean, I may live in this world of digital thing, and none of it, if it's tend to be tangible, then one may question what is the value of it.
Man,
so I think that just seems.
I've been there. I like empathize and resonate with what you're saying. It was when during the pandemic I got an Oculus headset and I started to probably not spend more than an hour a day in it, but finding that like I enjoyed it, and I had a few friends and we would meet up in there. These are friends that I couldn't meet outside because of the pandemic, of course, but I have friends, you know, that live in other parts of the world and we would never see each other anyways. And when you start to, you know, define your digital world is where you spend time, it's where you're comfortable, it's where you own things, which what things those are depends. I mean, it could be some digital art, but I think in the future, like, you know, if you look at crypto voxels and look at other VR based worlds, where you can transact in Ether, in crypto voxels, you can, you know, pay for art there. You start to say, well, like, what else do I need here? You know, and this is coming from someone who's, I would say I'm arguably very social, and I have, you know, I'm married and I have kids, and I like being in this physical world, but it's a cool thing. And I would compare it mostly to what we were talking about at the very start is, look at the way you have ordered groceries from an Amazon during California lockdowns versus what you did before. I don't know about everyone in the class. Like I would have never ordered Amazon groceries when I was in college, but with kids now, we would order it only for convenience. We liked going to the grocery store. Suddenly I didn't have the option to go anymore. And the grocery store has become a secondary option of what I do on Amazon. So I think a lot of those concepts where it's digital first are going to take hold over the span of our lifetime.
Fascinating.
So guys, I could just leave you with this then in terms of like how to get started with DeFi. We kind of talked through all of this, but just a few of the simple things that you would need: storing your wealth or your tokens. So you need a wallet. Like MetaMask is a free Chrome extension. So it's a wallet that sits on my browser, and it allows me to do what we were doing with Compound, where I can click and then I can transact and spend money from the wallet. I can trigger smart contracts to do things for me by paying a little bit of Ether. Tracking, which goes back to what we do at Zapper. So just, you know, look at your, here's an example of a really empty wallet, but, oh no, I'm sorry, never mind. This is the ETH2 deposit demo. No, this is someone has a lot of Ether. So this is someone with a lot of Ether in their wallet. So that's one way you can track your wealth on Zapper. That's zapper.fi. Using what I was calling like a search engine for trades, a DEX aggregator, an aggregator of all decentralized exchanges. So that goes back to, you can just go to Zapper exchange and you could be trading between different tokens here, and it'll go and find you the best rate. So it says here, Sushi Swap is it, and I could exchange for that. And then the last few here, we kind of covered this with Compound. Another popular one is Aave. lending to earn interest is like one of the most basic concepts. I would encourage you to try something on Compound or Aave once you get a wallet set up. Some advanced ways to earn are referred to automated yield farming, which on Zapper, you can go to the Invest tab and search Yearn. Oops. These are all options where you can just deposit a single token. So I could deposit, let's say, some Ether or DAI, and it gets put into an investing strategy is what we'll call it. But anyways, this is more stuff you would want to do more research on. I've got tons of videos at defidad.com. If you go check that out, tons of DeFi tutorials here you can learn from, especially the playlist DeFi for Beginners. That's a really good one to check out. And then the last thing here is providing liquidity to these decentralized exchanges, or more properly called automated market makers like Uniswap. The only reason that I'm able to trade in a permissionless manner using my Ethereum wallet is because of what we talked about with Uniswap, where people are providing 2 tokens to a pool, and then I'm trading between the 2 tokens. And if I put a little in, maybe the price goes up. If I take a little out, maybe the price goes down. And that gives someone else an opportunity to add more tokens and earn more fees and so on. So anyways, though, that's like a little DeFi starter kit there. Wallet, tracking, trading, earning, mostly lending, maybe advanced earnings if you want to dig into that with me on some of those tutorials. And then providing liquidity is another. It's a common way to earn, because if you own Ether and you own DAI, and there is a pool in Uniswap with Ether and DAI, and you can let people trade between the two and earn the fees in the middle, you earn a little bit of, every time someone trades, you earn a fraction of that fee. That's why DeFi becomes so powerful. It's letting you put your money to work, money that would otherwise be sitting there idle because of automated money software doing all the work for you. So anyways, by the way, I can stay longer if there's any more questions, but that's I feel like I've talked way too much. Definitely look forward to interviewing people more in the future.
Well, thank you so much, and thank you for walking us into this brave new world. And I think there's interesting to learn more. I mean, I think it's a very fascinating. It's just really fascinating. Thank you so much. On behalf of ExpoLab and UC Davis, I really want to take this opportunity again to really thank you.
Hey, but thank you so much for having me. It's like such a pleasure to join you guys. And if anything, I wish I could, I'd love to just hear everyone's like thoughts and join you in the future, because I tend to enjoy more like learning from how people are perceiving all these DeFi applications. But if anything, I just I hope everyone wants to learn more. And if you want to learn more, like there's things like if you go to tv.zapper.fi, that's the daily DeFi live stream I do. There's defidad.com, which has all of the tutorials. The tutorials are more in depth. It's me like really holding your hand and like showing every single step and explaining every nuance of what I do. But if anyone wants to get a hold of me, those are 2 really easy ways to get a hold of me. And then here's my email too. I'm always here to help. I mean, I remember being a college student not long ago, and it's quite a year to be a college student. There's so many jobs in DeFi. Come work in the space when you're ready, whether you're graduating or if for any reason you take a leave of absence. Would love to help people find jobs in the space. So you're very lucky you have such an awesome professor. So thank you. For, great class. I can't believe the lineup of speakers you have there. So you and bye everyone. Thanks so much. Good luck with your finals, and keep on chugging. You're at a great school. I always, for what it's worth, I always loved Davis as a UCSD student. I always thought thought Davis was another great place. I thought about going to school. So glad to be a part of that UC system.
All right. Thank you so much. Have a wonderful night. Thank you.
Take care, guys. Bye.
Thank you. Bye.